Bear market rally or buy the dip opportunity? Which do you think it is? Stick around. Today I'm going to talk about what I think as well as the three stocks that I picked up and why I picked them up because I use my bad news, good company type of strategy. Should be a good video today. Hello, my YouTube friends, and happy Monday, my favorite day of the week, which I know is weird for most people. My name is Adam Kahn, and this is Dividend Retirement, and also Investing with Adam K. I won't post the same video on the same screen. I hope everybody's doing well. I hope your accounts are hitting new highs, and I'm curious what you think. Is this a buy the dip opportunity, or is it a bear market rally? I think it's going to end up being a buy the dip opportunity. I do think we could retest, but I'm really surprised with how well Bitcoin's done, which seemed to be the catalyst of what was dragging the market down. The interesting thing to me is it didn't drag the market down enough for me to think that it's going to impact it tremendously, even if it has more room to the downside. I do think that they've disengaged from each other enough and that Bitcoin has become a different thing than it was originally. It doesn't seem to be a counter, not even sure the word I'm looking for, but it doesn't move in the opposite of the direction of the dollar, and it doesn't move in the opposite direction of the markets anymore. It is not a safe haven. It seems to be a risk appetite type of investment, which is very interesting. I think we probably made the lows, and the reason is because it makes no sense there. It should actually retest it. It should probably even breach it and go lower, even if it's going higher. The only thing that I like is that everybody got super bearish and is talking about how it's going to go to zero. I even pointed out the head and shoulders pattern that it made and talked about where technically it could go to. And I'm guessing that all that information is wrong, and there's finally enough selling pressure that the big guys like came in and took the other side of it, and potentially if it drops back down there, they'll continue to take it up. Now, as always, this is not financial advice. Please don't listen to me or anybody on YouTube. You guys need to do your own research when making your investment decisions. Potentially even reach out to a professional financial advisor, which I am not, because it's really important that you guys do your own research. And I'm not saying I'm right, I'm just giving my opinions on what I see. So, what are the three stocks that I picked, and why did I pick them? Now, I actually picked up a whole bunch of things between Friday and this morning, but this morning I bought Adobe, CRM, which is Salesforce, as well as Oracle. And I was using my bad news, good company strategy because my real thought process, and honestly, these aren't companies I was looking to pick up, but what I did with it is realize that my real whole mindset with investing is when the news is bad, things are on a discounted price level. And right now, all three of those, Adobe, Salesforce, and Oracle, have had enough bad news pushing those stock prices lower and lower and lower that I feel like it's probably pushed it to the extreme where it's gotten far enough. Now, understand when this happened with Boeing and when it happened with Target, you have to take a lot of pain because it doesn't just disappear. It slowly starts disappearing as the sellers continue to get out, try to do a little bit better, and the buyers don't just step in and buy it straight back up. Like, it would be really lucky if that were the case. But typically what happens is the selling pressure just kind of subsides. The news starts talking about the negative information, and then the stock naturally starts drifting higher because the selling pressure subsides. Now, I know that all sounds really simplified, and we all watch these guys who do tons of research go into the financials. It sounds really intelligent, but let me tell you something. I like doing that for my own comfort too, but it's a bunch of nonsense. They have done studies in a random walk down Wall Street. They used to talk about monkeys can pick stocks just as well as the professionals. Well, they kind of took that and they did a computer algorithm that started randomly picking stocks. And what they found was, yeah, random picks can do just as well as the professionals. And the reason why is pricing is pricing is pricing. And do you guys think that you're more intelligent than a guy like Dan Niles and that your research is going to be better because you can dig into the financials, look at the earnings estimates, make your predictions for how a company is going to do, and they haven't had that same information and then some? I was watching Dan Niles one day talk about his analysis on the Mag 7. And they are so detail oriented that he takes into account that it was a leap year, the year that he was talking about it, and the date when Easter lay, because I don't remember if it was first quarter or second quarter, but his analytics over the years of the data that they were researching indicates whether a company does better based on what time of year Easter lay. And there were a whole bunch of other things that can change the data by like 0.3%, making his valuations become that much different. I mean, my God, it is mind boggling. So if you think that you're more capable because you open up the computer and look at this information and think you can predict the future, I think you're kidding yourself, which is why I've reverted to going back and just taking the news and the information and recognizing that the stocks are very emotional. And when the news is negative and things are getting pounded, that means it's on sale. Is it a guarantee that it's going to do great? No. But if you stick with really good name brands, like I think Nike is probably okay now. It is not one on my radar. For full disclosure, it is not a company I own in my portfolio, and I'm not picking it up. But there was enough bad news on Nike as well. It's kind of why I mentioned Starbucks too. That's already seeming to drift higher. Now, I haven't looked at Starbucks to see. I would even throw PayPal in there. Now, I know I've rattled off a bunch, and the three that I went with are the ones that I feel like the news has been the most negative on for the past few months. And while I think AI is totally legit, and if you watched yesterday's video, I even talked about trusting the CEOs of the companies that you're buying. So if you like Meta, Amazon, Google, which are my biggest positions, and I like them, that you have to trust the board members and the CEOs. And if they're investing that much money into CapEx and AI, there's probably a reason. So the rhetoric on Adobe and CRM in particular is that AI is going to put them out of business. However, in the meantime, their earnings are very good. So I feel like there's a little bit of a Google type of moment when they were talking about that ChatGPT was going to put Google search out of business, that you have to trust the current earnings, how a company is doing, and hope that they have good engineers in their side too, that they're going to be able to survive and do okay. In terms of Adobe, they've said many times similar comments that the CEO of Google was making, which was, all of the competitors that you guys point to that are going to put us out of business, we are implementing the same type of things they use on their sites, as well as what we offer that professionals use because it's a better system. So I think that you have to trust that the engineers at a company like Adobe are able to implement these things. Now, CRM was a very tough one for me, and I went against my gut because I figure that Microsoft can do everything that CRM does. However, and the company that I've worked for, they use Salesforce. So I'm used to their platform, but I just don't understand the benefit of it. So it's kind of weird that I'm buying the stock, but I am going with that scenario that a lot of companies use them. They have good earnings and they do just fine. And despite the fact that I think Microsoft can offer the same products and for free or for a little bit, they haven't yet, and CRM still does just fine. So maybe the news is ahead of itself, maybe it's not accurate, and maybe I should just trust that the company is actually doing okay. Even though I agree with the news story, but I trusted my philosophy. Bad news, good brand name companies, maybe they're oversold. So at least in my opinion, they're discounted. Does that mean that they're going to go higher and I'm going to do really well with the stock? Maybe, maybe not. But I think I'm getting it at a discounted price. So instead of seeing something go on sale and running for the exits, I would rather buy something for sale. I don't know if you guys know, but that's an old term from the markets that Wall Street's one of the only places that when things go on sale, everybody runs for the exits instead of jumping in and buying the sales. And I find that to be true. When the market falls, people panic and they go running, as opposed to going running into the store to get the deals. So I don't think it's a bear market rally. I think that was some good fear and panic. I know it made me nervous, and I try to use my excitement and my nervousness to trade in the opposite direction, no matter what I'm saying. And like, that's just what I do and what I used to do on the floors. Um, when I get really worried, I might be buying things. And when I'm getting excited that the market's going up, I might be relaxing and getting out, just because I've done that for so many years that it becomes this natural thing. Now, understand, if the big correction ever comes, like, it just keeps coming and coming and coming, and people will be very, very surprised, including myself. It's that what I look for is, I'll drive to, the reason I like Target is the news was terrible, everything was bad, but then I would go to the stores and I would look, and there's still plenty of people shopping there. Now, that's no guarantee, but that's kind of my point with Adobe and CRM. I don't think their customers are canceling their subscriptions to go use what CapCut, or to go use InShot, or some of the other Snappa or whatever. I do think that new people are kind of using those programs. I have a friend who teaches, like, she does media at the high school, and she said she can tell, like, they use Adobe for the class, and she can tell some of the kids are using CapCut on their phone and it doesn't fit their model of what they need, so it causes her headaches, and she essentially tells them, hey, you need to go back to a computer, not your phone, and do it on Adobe. Well, they're not changing their system, and I'm guessing a lot of companies that use Adobe aren't just canceling their products because there are these other options. Maybe they use both, but maybe they continue to use Adobe, and maybe Adobe is able to use AI to enhance their services, which is kind of what the CEO keeps saying. Either way, that's my theory on those three. I also don't think it's a bear market rally. I think we are still in a bull market. I don't know what I will look for when I think it's changing. But even with that big correction, my set it and forget it account did not fall very much. I watched the markets, it looked like they were, but if you're well diversified, if you have a good mix of defensive and aggressive, you might underperform, but if you're old like me, there will be some comfort in your account not dropping precipitously on those down days. Now, of course, if there's ever a huge crash, there's a huge crash, and pretty much nothing gets, like, everything is included in that. But at least when it's normal corrections, the defensive stuff is probably going to do well. If the market starts going higher, you will see the defensive stuff kind of lag behind. I'm hoping we get a more broad-based rally this year and next, but I think economy is okay. People are still going out to dinners. They're still going out skiing and snowboarding and going on vacation and whatever else. While I see layoffs, and while my brain can go all crazy with what AI can do, and how I don't know what we're going to be in 10 years, what jobs are people going to have, the reality is, I think you have to use the information in front of you and not just assume this terrible, evil, nobody's going to have a job and the entire world is going to collapse mentality. And then in the news, I have another question for you guys, because if anybody saw what's going on with AppLovin, my buddy Steve got really beat up on a trade because Capital Watch, and forgive me, please double check the information. I'm not 100% sure if that's the name of the media organization that put it out, but said something about AppLovin, one of their major shareholders, being involved in criminal activity. They ended up coming out today and retracting the story after the stock has fallen somewhere from $700 and change all the way below 400, to come out and retract it for the stock to start surging back higher. Now, should the media source be held responsible for any losses that investors incurred? I don't know. That's a tough position. My buddy is really upset about it. I don't disagree with his thought process, which is like, wait a second, this stock fell over $300 based on their report, and then they're able to come out today and just retract it, saying, hey, we were wrong, and there's no repercussions for that. Interesting process. Are you just at risk for any stock that you buy? And that goes in line a little bit. So I was watching a video with two guys who I really like, and I like all the research they do. And they made a comment about, people they listen to who don't even do the research and just like buy these random stocks, which is why I said that about a random walk and the monkey and everything else. Well, as somebody who invests, these are the things that you can't predict, which the professionals can't either. So does it make one better than the other? And if I can just encourage people to invest, I said it to a friend last night at the Super Bowl party. I'm like, look, my attitude when I make suggestions to people that I would like to see them invest, I don't care if the money falls in half. Now, I don't want that to come off flippantly. I don't want it heard the wrong way. But my attitude is if you put $1,000 in something and 10 years later it's only worth $500, and you would have just gone out and spent that money on toys and dinners and whatever else, I would rather somebody have the $500 than zero to be able to use that towards retirement or things for their life. So my entire goal here is to get people to get in the habit of putting money away, saving for their future so that they're in a good spot when they're older, because what you don't always realize when you're young is your knees hurt, your back hurt, your eyes hurt, your brain starts to not work as well as it used to. You get burnt out a lot quicker. When I was a kid, I could work 2 jobs. I could sleep for like 6 hours, wake up the next day excited to go to work, and just go and go and go. As you get older, it starts to change, and you just don't factor that in. You kind of think my age will be older, but I'll feel the same. Until you get older and start recognizing that no, things change. Even travel gets harder, which is part of why I'm trying to retire younger, so that while I'm still okay, I can get out there with my wife and go see the world and fortunately spend time with them. Either way, my point is, should these guys be held responsible when they move the markets like that? Or is that just the risk of an investor that sometimes things happen, and if a media source reports something and they end up wrong on it, well, oh well, you just have to deal with the ups and downs in the market. Now, I go both ways on that. I kind of think, yeah, that's the risk of the market, and I'm sorry that they reported that and end up retracting it and being wrong, but they're allowed to report what they report. If it impacts the price of the stock and you're stuck in a trade, it is what it is. No different than what happens when anything happens with a stock. It's the risk that people take. Either way, I still think it's worth investing. Your ultimate goal is just to do better than a bank account, I think. And even if you don't and you wouldn't have saved that money anyway, man, just, I think Singapore's got it right. They take a certain percentage, it goes straight into an account. Whatever you make, you actually get a check for less, and that money can be invested how you invest it for your retirement. Anyway, let me know what you guys think about the AppLovin story. Should the media source be responsible for the stock price move, and anybody who took a loss? Like, he got out of the stock, and of course at the worst pricing. And so he's really frustrated today to see that, oh, well, we retracted the story, we were wrong. So should the media source be responsible for the stock moves, or should they be able to just say we retracted it, we were wrong, and have no repercussions? I'd be curious what you guys think. Anyway, hope your Monday is going as well as me, other than, a little cloudy today. But man, I love Las Vegas. I know people talk about the desert and how hot it is, but come the winter time when we just have the greatest weather, it is such a good place, and we're not super humid, which I love because I grew up in the, anyway, I can blab forever. So hope everybody's having a great Monday. Do me a favor, tomorrow, 11 o'clock Pacific time, I am going to do a live on my Investing with Adam K. If you guys can make it, or if anybody can, super cool. If not, no big deal. I end up just yapping away if nobody's there anyway, which is cool by me. I just like when people show up because it's kind of nice. I like that platform, and it creates some good conversations. Anyway, have a great Monday. Enjoy the markets, and I will talk to you guys soon. Bye-bye.